Hi guys, welcome back to another video, and today is 7th of April 2026. So quick one, we'll be going through the trade I took today and how I managed it. It was obviously a loss, but it was properly managed, and I'm satisfied deep down because I stuck to my bias and I stuck to the idea I have in mind. Right, so let's just get into the chart. So we'll be using this. Let's do a replay back to this. Okay, so first of all, looking at the daily, price has been bearish, has been going down for the longest time, right? But um today, or as at yesterday, we had a bullish candle, an up close candle, and we still had all of this liquidity around this level here, and we still had liquidities around this level here. So I was hoping that we could still head for more buy side. And on DXY, we were actually bearish or wanting to target a sell side internal liquidity. So that's that. So we're looking bullish on this because we're expecting bullish confluence. See this value gap, the week, then this candle closing up felt like a good sign. So going into 1 hour time frame, okay, the network is now allowing us. So one thing is I was bullish and all I wanted was price clear sell side before we look to buy to the upside. It's as simple as that. We want to clear sell side before we go for buy side. And the information I'm having here, price went up but didn't clear this high side. So let me just play price and let's see what happens. Take it back a little. Okay, okay, okay. So first of all, let's note where our 9:30 is. 9:30. So let's say this is 9 o'clock. Play price. Okay, okay. So this was around London session. Okay, that was too fast. But yeah, we'll take it back a notch. So this was price. This was London session. Price failed to clear out yesterday's high. So I felt it was now a stronger liquidity. It has generated liquidity. And what I also want to see is my new week opening gap. Is it either it is holding price or price disrespect it and we are officially bearish. That when I say bearish, we are now going to the down sell side. We are going to the sell side. Oh, we're taking out all of these lows and we even go further more to take out these lows. That's what's going to happen if we disrespect this new week opening gap. So price got there. Let's go down to the 15 minutes. Okay, let's go as low as 3 minutes. So price got there. So I saw that as a chance for price to reject from that level, and we can start going to the buy side. Network. We can start going to the buy side. Let me just identify the leg we swept. So looking at this, we took out this sell side here. Took out that sell side. Share chart. Then I marked out this first presented fair value gap on 3 minutes. So the idea is, how do we know that this fair value gap is solid? How do we know that it's a valid fair value gap? First of all, because of the time, it happened after 9:30. The first fair value gap after 9:30. Then secondly, price reacted from it. So what we want to see next is for price to sweep again, then now start buying aggressively. Then we'll buy above this place and reject and retest it. Then we keep going to the buy side. So that's basically the idea. So let's go ahead and play price. Okay, good. So we went further to clear our more sell side and created another fair value gap. So creating this fair value gap here, like I said, how do we know if fair value gap is valid? It first rejects price, then break through it aggressively. So we play price. This was an aggressive move here. So this is long as candle. It was an aggressive move. So that's a sign that we're about to move. So I pull up my MT5 and place a long position. So I took two positions actually on my main account and I took one position on mine. So ideally I was managing my stop loss at this area, but this is where stop loss should be a reality. Okay, so let's um, identify potential targets. potential TPs. So okay, first of all, these double highs around here, this double high will be like the major draw on liquidity. Then we have this swing mini buys and liquidity around here. So those were the two targets I had my eyes focused on. So another thing I was doing was I was looking at DXY too. So unfortunately, DXY was moving very fast. He got to the target before this guy even showed sign of like 1 to 3, 1 to 2, or 1 to 3. So my rule is after 1 to 2 is when I um break even or take partial. So the maximum he gave me was 1 to 1. But still, let me see pre-price. So the way price reacted from here, I think this was where I went in with my second position. So after price reacted from here, I didn't expect price to come down. Or I don't expect price to come down back again. This should hold. So even if that does not hold, price will most likely sweep and use this value gap to keep going up. That makes sense to me. So play price. I already set my break even around this area here. So let's keep play price. And boom. This was where price took me out for break even. So it was not the best trade, but I knew my draw on liquidity. I knew the bias, and there was conviction for sure. There was conviction that okay, price was supposed to. Although I saw this sell setup, I saw the sell setup on US 30 and also on US 100, but I had conviction and I knew where I wanted price to go. Okay, not where I wanted price, but where price should go to based on my analysis and my strategy. So that happened and I took a break even around this area. If it was before, I'll be wondering that why did I set my break even here, blah blah blah. That is not even close to this entry, and I might be in a little bit of drawdown or a little bit of loss. Just regretting setting break even that early. But with experience, you know that okay, if price is supposed to go, it will go. If it's not going to move, it is not going to move. It's going to move against me. So there's always a time frame and experience for that. So I already knew price won't play out again, and as you can see, play price in the future it smashed SL. So that's how I ended up with this setup. Right, so it might decide to go back up. That's fine, but it is now beyond my time frame, beyond my time window. So it's not aligning with my strategy anymore, at least for now. So that's that on that. Let's see the XY. Let me just show you the XY. You can see so the XY, the trade was around here. So this was the rate boom, this momentum to the downside boom. This would have been the trade to this. So price got to this target before US 30 got to his own target. So that's why it may have happened in that manner. So DXY messed me up. And let's see, Nasdaq was really bearish. Really, really bearish. So like I said, I saw this trade on Nasdaq go. I had conviction and I knew it was a buy day. I wanted to take buys for that day. So I didn't interfere or go against my bias because failing a trade and being satisfied that you followed every plan or every setup is a win compared to losing losing and still be filled with regret. So let me just take that again. Failing a trade and knowing in the deep part of your heart that you followed your plan and you followed your strategy is still a win than failing a trade and be filled with regret. You know that you didn't follow your plan. You thought you were smart and you still got knocked by the market. So there are two different things, and there's peace in that and there's kind of growth in that because you really learn to be better and you can only get better. Yeah. So don't let me talk too much. Blah 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 yada yada yada. That was the truth for today. So probably see on our next video. Do want to like, subscribe, and comment. Let me know whatever you think I did wrong or did right, or whatever you've learned, or any video you want me to do. It's a community. We are growing together. We're learning, sharing experiences, and all of that. So yeah, let's support each other and yep, we'll see you at the top. So peace.